traders, but I could still use warriors, and I could also use the word investors. So Bob Coleman agreed to be with me today because of all the interest in the physical markets right now. Markets make historic highs. Everyone wants a piece, FOMO, everything. But we want to help you avoid landmines that a lot of people are stepping on. So, Bob, welcome to the show. I look forward to being able to ask questions that, any consumer or buyer of physical metal products should ask as before they wire their money.
Sure. Appreciate being on. And I think you could add also survivors to that to the warriors list, I guess, for
Yeah,
anyone who's been in the metals markets for any period of time.
yeah. We earn our battle scars. It's only made us better. So, some of our victories come from our failures if we embrace them. So I know, we could talk a little bit about this. I was curious how long you were interested in sound money, hard money, when you first started becoming aware of it, that the dime you had in your pocket as a kid wasn't silver, and that pennies weren't copper anymore. And so it's really a lifestyle being a sound money guy.
Yeah, I got into the business back in '92. Started with Dean Witter in '93. So
Okay.
back when they were still around. And that, for people that don't know that, that's one of the older broker dealers that got bought out by Morgan Stanley back in the mid '90s. So then
Yeah, they had offices in Sears. You could also go buy a washing machine.
Yeah, that was an interesting combination. Sears, Discover Card. Oh my goodness. Yeah, it brings back the days.
That's funny, Bob. My first job in the business was as a runner on the floor of the CME for Dean Witter.
Oh wow.
Yeah,
Was
God, I
was
haven't thought of that for a while.
was that on the Pecos or
No, it was in Chicago on the
yeah.
on the Merc.
Okay.
Yeah, I remember, being up in the gallery and a friend signed me onto the floor and I saw the bellies go fast market. So I went from desk to desk and I said, I don't care what you pay me. I want to learn the business.
Hmm.
And it's a good thing I didn't care about
It's
what
very
they, yeah,
yeah, it's a very intoxicating, lifestyle. I think yeah,
yeah,
it certainly is very interesting, and for people that love finance and the rush and especially the trading aspect, it's sometimes it's exhilarating, sometimes it feels
yeah,
like absolute fear. So,
yeah,
um, but
yeah,
yeah, yeah. So I was always a gold guy, kind of in that world. And then I kind of broke off, opened up my own investment advisory firm in 2001, opened up a hedge fund in 2001. But by 2006, I saw everything melting up in terms of bank leverage, the real estate market. We would live through the
right.
one big bubble with obviously with the tech stocks, but before that, you had the currency crisis, Asian contagion, all that kind of stuff. And most people may not realize back in '94, you had Orange County crisis, the
Yeah,
bond market blowing up, inverse floaters, all that good stuff. So I kind of learned back in '06, I started to say, listen, there's only one way to try to protect yourself with what's coming. And I thought, well, you have to own something outside the financial system. Gold and silver made the most sense. It was, time tested financial asset, very unloved. So, from a contrarian standpoint, made a lot of sense.
back
But
then,
then
yes, yeah,
yeah, but then you start looking at how to own it. I started looking at how to insure it, what to buy, everything with regard to that. And I looked at depositories out there, and every depository was either owned by a gold dealer, a financial institution, or a cash and transit company. And all those are transactional based operations. So if the market collapses or the economy collapses, and the whole reason we buy gold and silver is for potential economic crisis, uncertainty, all that kind of stuff. Well, these types of counterparties could be vastly impacted. So by 2008, I ended up opening my own depository business. It's the only depository I know of that's not owned by a gold dealer, financial organization, or a cash in transit company. So it's solely storage.
So let me ask you, so is that a landmine that these depositories before 2008, after that happened in 2008, they failed and people were not able to get their metal?
Well, in essence, like a good example is HSBC. HSBC in 2009 went through an audit. They shut down their entire retail custodian operation, which was the largest depository operation in North America at the time. And that's how Delaware Depository got big. But what HSBC realized was that before 2008, nobody took delivery of the stuff. They bought it, they stored it with a dealer. The dealer ended up buying, say you had 10 clients that owned 100 ounces of silver each. They went ahead and bought a 1,000-ounce silver bar to replicate those 1,000 ounces. And all of a sudden, the depository didn't know who owned that metal. All they knew was there was a master agreement with the dealer, but the dealer kept from the custodian who actually owned it. So there's no way to parse this stuff out. And I started looking into all this stuff. It's a very common practice, these master sub-agreements. Dealers will do this so they can grab the transaction and then offer some form of storage as a carrot to capture typically larger transactional size. When people have a place to put it, they'll buy more of it. And that was a very common practice. So that was one thing. Well, when 2008 happened, you had Garda literally go from, they went down to, I think, 70 cents an ounce or 70 cents a share. Canadian government bailed them out. Brinks, which was heavily levered, they went from 75 to 20, but they would have went under because of the massive liabilities that they had on their balance sheet to find benefit plans, that type of thing. So they got bailed out. A lot of people got bailed out. And so that's how sensitive this whole thing is. And then you look at, the dealers that own these depositories and their business structure, if they're on the wrong side of a trade, if they can't get the product, for example, and all of a sudden they sold short a bunch of Silver Eagles, and now they either default on the transaction or take, metal out of the boxes. Well, human nature is going to say that, they better, it's better to survive and fight another day. So you've seen that where you had First State Depository, $115 million theft. You've had Tolvane, which was a big gold dealer in early 2010s, go under. Northwest Territorial Mint, who had a segregated storage program, and they were a private mint and dealer. They got nailed. I think it was $20+ million that they took from people. But this is not. This is the side of the business that I think is where the manipulation really lies, because this is where the client or the customer doesn't have that public knowledge like they do with a public company, or like the COMEX, which provides transparency in terms of stock reports and delivery reports.
Well, it's not a segregated account.
Right.
So let me ask, this brings me to my first question after all these stories I'm hearing about this. I have 100 grand. I want to buy some metals. I may wait for 42, which is where I think silver's pulling back to. You could put that, I'll share that with you, Bob. You'll see me right and wrong, but it, finally did get the top. Persistence pays. But, when people have to choose a dealer, okay, and, they see ads and this and that, what do you advise? Pretend you're someone looking for a dealer, okay, and you can't use yourself right now, Bob.
Sure.
Right. Okay. So what are you going to look for in a dealer before you wire them money?
Yeah, it definitely pays to shop around. I mean, talk to local coin stores, talk to, the problem that I see online, the big online guys, is they've created this sort of manufacturing type system or conveyor system of promotion, fear mongering, create anxiety, get people all roused up. And then, if you look at their premiums, a lot of them are very highly marked up. And I'm talking just the big online guys. I'm not even talking the guys selling, out of, Beverly Hills that charge, 60%, 80% markups on half-ounce gold products and 1.25 ounce silver products and things like that. So the problem is the community gravitates and supports a lot of these dealers because they promote this idea. It's, hey, listen, it's us versus them. We're the small guy. The banks are the bad guys. You know, the government's going to come get us. You know, it's very pointed marketing to get people. And so when they have these big markups, they have obviously more money for marketing, and it becomes a
Right.
loop. And so guys like me that don't mark up a lot, sort of, we don't have the funds to go out and throw out there into the internet to get plastered everywhere, and that's unfortunate. But that's
Well,
where,
you know, I kind of felt sorry for you, and that's why I brought you on.
sure,
No, I'm
I
kidding.
no,
I'm kidding, Bob. Okay, so one is really a marketing machine
hmm
with metals being the vehicle. So how do you know if it's not the big online guys that are marketing, and that's what people see and mainly choose because they become aware of them? How would you go about shopping for a dealer?
what I would do is you have to really dig in and just search, and query and talk to. I mean, when I started doing this in 2006, ended up talking to wholesalers. I started talking to insurance guys, everybody that was in the logistics guys, everybody that was in the business to try and understand how the system actually worked first.
Yeah,
And because I wanted to get, being an investment advisor, it's interesting because being an investment advisor, you can't charge a commission or a management fee on physical assets, only on securities and funds. And so that's one of the reasons why Wall Street doesn't really get into physical metal, because there's not a way that they can actually monetize that revenue like they can as an investment advisor.
I didn't know that.
Yeah, yeah.
Okay,
So and then another reason why a lot of funds or don't get into precious metals is because the charter or the offering memorandum states that they can only invest in funds, securities, derivatives. They can't go into physical assets such as land or physical, gold and silver, that type of thing. So they have to go into ETFs, that type of thing. So there's some
okay.
nuances that I going through this, it took 2 years to understand this whole thing. But I think just calling around, when you buy, ask, one of the things you want to ask is, most dealers will not tell you what their balance sheet is. They're not going to, they have no uh, legal responsibility. They're not a fiduciary. They're just selling inventory is all they're doing. But one of the things you should ask is, when you ship it to me, do you have insurance? Can you show me an evidence of insurance? Because what you're seeing with higher prices now is the
That's a
per pack,
nugget.
yeah, the per package value is rising, because gold's going up. So, for example, a gold kilo bar, you're talking $140,000 plus in one package. Most gold
Right.
dealers do not have that insurance capability to cover that package unless they go to their insurance company and get a waiver or some type of one-off approval. Um, what I've done is we have up to $150,000 coverage per shipment or per package with USPS. It's 120,000 right now with FedEx and UPS, but we're looking to increase that to 150,000, just like with USPS. And then 500,000 per shipment is what we can send to a customer via courier. And then we have $1 million freight coverage. We can send, a pallet of silver or receive in a pallet of silver through LTL shipments, that type of thing. And then we also have we actually have armored trucks, so we can move up to $10 million in the truck standard with our insurance policy. It's a very beefed up policy, but that's what I do for a living. Our goal is to support, not just retail, but high net worth, ultra high net worth investors. Um, but that's the care and that I take as a sort of a advisor or sort of my registered investment advisory side. It's that fiduciary responsibility that I look at to protect the client's interests, not mine. Because what you're seeing now in a lot of facilities, and you see these clauses that allow them in the agreement to post any changes, not send it directly to you, but they can just put it on a website, on a disclaimer page. And what you're seeing now is the waiver of jury trial clauses popping up everywhere. So people don't understand. They're signing away any recourse to the depository or the dealer before they even do business with them. So you got to read these contracts as well.
Wow, contracts, insurance, right there, you probably saved some people when they watch us. I would say if a guy, they're not paying for insurance, who knows, are they sending me coins painted silver? And doesn't that happen where, and people maybe they don't even open the box and when they need it, it's not real.
Yeah, that
It's
would be
rare.
complete. That'd be complete fraud. Now, what you have had with Oxford Gold, for example, is allegedly, you have to use that word, but they're right now, I think, in a not only lawsuit but also criminal, where they were taking in funds, and this is in the IRAs as well, taking in funds and not even delivering the product to the IRA custodian at the depository. So you're seeing, the shift of risk now growing, and not just with a dealer, but also if it's an precious metals IRA. Now the SEC is looking at the IRA custodians, the self-directed IRA custodians, saying, "Hey, listen, you're not just an administrator; you're a fiduciary." Because in an IRA setting, IRAs are an investment account for one. Two, the client cannot touch that metal. And so they rely on the IRA custodian to be acting as the trustee, overseeing whether the assets have been received into the account. Obviously the transaction was settled, that type of thing. So this is starting to broaden. And what you're seeing right now, for example, with First State Depositories fallout, is New Direction IRA is now currently in a lawsuit, uh, uh, which there's, I don't know how much, it's tens of millions of dollars that were basically vanished from First State Depository that was under the New Direction umbrella. That is a massive liability, and now you're starting to see, they were trying to actually change a clause in the agreement stating that you couldn't do a class action status, or waiver of jury trial type clause. They were trying to change these contracts after basically the horse had left the barn, and the judge last year struck that down. So the industry, obviously, they have an army of attorneys. The attorneys are going to work for their interest, not for the customer's interest.
Right.
And so you have to understand that as well. It's nice to watch a YouTube interview or watch a guy on a podcast and say, well, God, that guy seems like a nice guy. He's such, has such a charismatic, attitude, and that type of thing. But at the end of the day, it's what's on the contract, what matters, and that's how you have to live life.
You know, your story about this with IRAs makes me also think about people putting their IRA money into cryptos as well. I mean,
Hmm.
what's their recourse with that asset unless they have a wallet and they have it? But if it's in an IRA, who knows?
Yeah, it's
Right.
up to the IRA custodian, and but I mean, barring the price action, I mean, because we're not just talking price action here,
No, we're
whether it
not.
goes up or down. It's really just the responsibility and liabilities that are associated with these accounts, and then with the counterparties and so forth. So for example, you look at with Oxford Gold, for example, they were going through another big IRA company, Equity Trust. And that was one that Equity Trust was was paying the money to Oxford Gold. Nothing was being delivered in, and then I think 6 months later or so, Equity shut that whole thing down. But by then, the horse has already left the barn, and now people are going after Equity Trust is being brought into this lawsuit as well, with Oxford Gold. So these are the problem is the industry doesn't need to report this stuff. There's really no regulatory oversight, unfortunately.
Okay.
Um, yeah.
So, what I want to talk about that is also very important, um, is spreads and what people should look for. Because Bob, when like right now, it's not as bad as it was a few days ago, but I was seeing bid offer spreads about 6, 7 cents in silver futures, which is unusual. Okay, it's usually tighter. Like right now, it's fairly tight, but on the way up and on the way down, the future spreads were blown out. So I could imagine what dealers are doing, trying to hedge and then make money with spreads being wide, what's a fair spread for people to look for from a dealer? And
Yeah,
can they give you a good spread and yet have another way to make money on you with additional charges?
yeah. Right now, the last 3 weeks or so has been just wild. The wholesalers have been forced to basically use the futures price bid and the London offer, if that makes sense. So the spread was, as much as $1.70, $2 on silver.
Wow.
Because there was no way, if the wholesaler's taking in metal, they have to hedge it somehow, and the only way they can hedge it's via the futures contract, or some type of proprietary relationship with a bank, that type of thing. But the bank's still going to use the futures price. So the futures market is still a very prominent vehicle to hedge with.
Right.
But the problem is the retail investor, when they come into the market and they see these wide spreads, they're like, well, I don't understand why there's $1.70 spread between the bid and offer. That showed the stress and the tightness of the silver market at the time. It's starting to relieve itself. You're starting to see these spreads, like you said, starting to tighten again. The
Yeah.
backwardation going from $2 to as low as 20 cents overnight. And I think it's back to about 40 or 50 cents right now. Meaning that the futures price is
Yeah.
40 cents less than the spot price. But there's a lot of confluences that are happening. I think that, and I try to explain this every day on Twitter or
So
X.
were your spreads the other day a buck 20 between bid and offer?
Yeah, I was reflecting basically what the wholesaler was. So if I had to
Okay.
sell to the wholesaler, that's I basically mimic the wholesaler in a way, and then I have very low markups or markdowns from where the wholesaler is. So, for
Okay.
example, where a lot of retail dealers, especially over the summer, were buying back silver at $3 and $4 under spot. I was a buck 25. And I'm still around $1.25 under spot for most products. Part of the problem we're
How
seeing,
do people know? Can people have access to a wholesale price?
no,
Is that information out there?
it's not out there. It's just you have to be obviously a dealer or some sort of participant with that wholesaler to get that information. But on my website, on the buy page, we post the bids and offers on the website, and those bids and offers are coming directly from the wholesaler. So I try to be
Okay.
as transparent as possible. So when people are looking at the actual spot prices, they see what I'm looking at. And unlike a lot of retail dealers, there's since 2020, there's been a practice of artificially marking up the spot price 20 or 30 cents an ounce on silver, 10 or $20 on gold, to make an extra profit. I don't do that. I just basically look at what the wholesaler's charging, and when I lock in prices, it's based off of that.
Okay. All right. Well, buyers should be welcoming this pullback. I think we get back to 42. To me, what was interesting? Let's talk a little price now, Bob. Is that we had that massive triple top breakout, right? Took out made new historic highs. And even CNN was talking about silver that I think it was Dorothy's slippers originally were supposed to be silver, not ruby. And and then some of the guys that we've already talked about started talking about buy silver now before it triples. That kind of stuff came out. And the gold silver ratio kind of tipped me off. I missed a lot of this, but this was parabolic, bro. Look how it held the 9 day. Anyway, uh, this should be a great buying opportunity. And with the information that you've given people, because I don't think it's the end of the bull market, I think it will triple one day. It could triple one day, not tomorrow, like it's being sold. Buy it now before it happens. But those are the guys right now that are promoting and ripping people off. And it's tough enough with the legitimate spread to make money unless it's just, silver turns into meme where a buck or two doesn't matter, but it can matter.
Yeah.
because you're going to sell it too one day. So you
Yeah. And
have
that,
to, right?
yeah.
Go ahead.
Yeah. Yeah. And that's an important thing you just brought up. The spreads between what you're buying the product at and what you're selling it at. Right now, a lot of products have been driven up on the offer side. The premiums have spiked, and retail dealers are, very quick to do this. But when you look at their bid prices, they're
There's,
still
they
off.
didn't move them.
Yeah, barely moved them. So like, for example, one of the largest online dealers, for example, has almost an $8 spread right now between what you buy a silver round for and what you could sell it for, buy it for and what you could sell it for. That's $8 that you
Yeah.
have to overcome. And people aren't aware of that. They look at that dealer going, "Oh my God, they're all over the place. They're on, I don't want to say the publication, but the idea is that they pick up a lot of marketing, and the community supports them, but the community doesn't realize how much they're actually overpaying for that marketing. And that's the unfortunate part, is that as prices do go up, people are going to become natural sellers. The bids
Yeah.
are going to become weaker. I mean, right now, junk silver, which is the 90% U.S. coins, dimes, quarters, halves, they're actually still falling in premium, and they're at deeper discounts to spot when you're selling back. Um, you know, so the product market is sort of bifurcated, and I can walk through for your listeners if you want to kind of give you an understanding of why the offers or the premiums are rising on specific products, versus other products too, if you're interested.
Okay. So that's also an important thing. So most people buy their junk. I know that's what I bought from you at $21.
Yeah, silver
Uh,
rounds. Yeah.
round. So that's junk, right?
No, it's junk silver is the 90%
Oh,
quarters,
oh,
dimes. Yeah,
oh,
pre
oh,
64. Yeah,
okay. Anyway, it's one of the best trades I made all year, Bob.
sure.
Because I couldn't sell it.
Yeah, that's one
I'm
thing.
not going to claim any credit. It's heavy to carry around.
Yeah,
Anyway, yeah. So knowing product, what's in favor, what's going to hold up better, which isn't going to have um, a huge spread to the downside if you need money, because sometimes it's not an investment decision. Maybe you have 50 grand in silver, but you lost a job, you need to raise some cash. That's a consideration. We all say we're going to buy and hold forever, but um, most don't.
yeah.
So you have to think about the other side of the trade. Yeah, go ahead and talk about what's in favor in the market. So that's also something that buyers need to um, learn about.
Yeah,
Uh,
and it's very difficult because the dealer is not going to give you, when you call a dealer, their business is to sell metal, and it's to sell their inventory, period. So they're going to tell you, some dealers may say, listen, hey, look, this is a better product to buy based on premiums, or, if you want to buy Silver Eagles, we'll sell them to you. Because so right now, Silver Eagles are, I'm seeing $10+ over spot right now. And you look at their bids and they're at, a spot or a dollar over spot right now. But back over in the summer, everybody was at discounts a spot. So it's not, these premiums will shift around. And so
yeah,
if you want to get an idea of maybe what product to buy, for example, like I'm buying people silver rounds right now because I'm selling them at $1.60 over spot, whereas most other dealers are $3.50, to $5 over spot, with a bid at $2.50 to $4 under spot.
wow.
And so I'm 100% premium wise, 100% to 200% cheaper than a lot of these guys out there. But what's transpired was basically over the summer, you had very dead market. You had a lot of
Yeah.
inventory. Carrying costs were very high.
You told me retail was blowing out at
Y-
30.
yes, yeah,
They
and
missed it. They missed this whole run.
yeah, a lot of people did, and then you've continued to have a lot of selling on the way up, which isn't talked about by the promoters at all. And so what's happened is, the refiners are just overloaded with metal. They're processing every day, trying to keep up. They've basically stopped buying junk because of, or saying, hey, listen, if we're buying it, we're not going to be able to process it for 8 weeks or 12 weeks, whatever it may be, and we'll hold on to it for you. But then dealer is going to be paying carrying costs for still holding that material until they actually melt it and lock in the price on the melt. So the what's happened was you had a lot of mints and private mints and refiners not make product over the summer, and then the U.S. Mint in August went out to all their APs and said, "Listen, what's your allocations for going into the end of the year?" Well, everybody was up to their gills in inventory. They came in light on their allocations, and then September rolled around. You have natural, it happens every single year. You have a crossover between mintage years for sovereign coins where they go from the 2025s, for example, to the 2026s. So they stop making the 2025 product, they start making the 2026 products. So you have this gap in time that when product is actually available, the new product's available. With Royal Canadian Mint and British Britannias, they tend to come out before the new year starts. The U.S. Mint doesn't start shipping 2026 product till 2026.
So the 2025s go up during that lag period.
Yes,
Because
and
people when they want metal, they want it now.
yes, and that's exactly right. When you can't have it, that's when you want it the most. So now you have a jump in sovereign coin premiums, and it's you have to look at this from a longer term perspective. When the 2026 product flow starts coming to market, that's going to be supply. That'll alleviate these premiums. So now you have to look at, from an investor standpoint, what do I buy to manage the spread? One is, and also to get the most silver for my money. And to me, rounds make the most sense. It's not always the case, but right now it makes more sense. I'd rather pay $1.60 over spot as an investor than $8 or $10 for an eagle or $6 for a maple leaf that I'm seeing online. This is how you manage or help manage people's investments. It's not necessarily, hey, listen, I'm going to sell you whatever you want to buy, or I got this half-ounce, St. Helena gold coin, from the Perth Mint that's, limited mintage edition, but it's only a bullion coin, and I'm going to sell it to you at 60 or 80% over spot with a massive markup. You'll probably never make money on it. You try to do the best thing for every client that calls in, and unfortunately, in online platforms, it's all about volume. Unfortunately.
Yeah. Bob, I was just thinking about this and listening to you talk and knowing your background as an investment advisor and being compliant, aware, and knowing you're a fiduciary, just coming from your background before you went into precious metals, whereas a lot of these other companies, they have guys that they've recruited off used car lots or have been in other boiler rooms for most of their career. So the difference really shines through. And I know people are going to say, "Oh, Dale, you're making a commercial for Bob." I've no commercial interest in this, but um, you talk to your clients rather than just talking to a salesman, someone with wisdom in the markets. And I just wanted to make people aware if they're having a hard time trying to find, a dealer, to definitely give Bob a once over. I know I was treated well, and you really gave people some very significant things to think about before they choose a dealer, especially the insurance and then the sell spreads. And there are a lot of landmines out there, buddy, and I think you pointed them out, and people have a better chance of not stepping on one now after listening to this. Thank you.
My pleasure. And there's a lot more, but at least this helps people maybe start the journey of research, maybe what to look for. I mean, AI is a tool, but the problem with AI is it only can suck in whatever's been inputted into the internet. A lot of the stuff is still, very archaic. It's not regulated, so there's not much, public information on this stuff. And I've done other interviews in the past, done slide decks on what to look for, clauses to look for in the contracts, especially if you're in a structured program, understanding who the counterparty really is. If you're storing outside the U.S., for example, a lot of U.S. or a lot of programs outside the U.S. are actually have a dealer that actually is the front man for the storage contract. And in that regard, the IRS has a very specific exclusion to directly held, that if someone has an insurable interest and can touch your metal, it's not directly held. So a lot of these programs, the clients may not understand, is they may have to be filing an FBAR or Form 8938 every year, and every year that they don't, you're talking about a up to $50,000 a year fine for not filing. And again, I've seen these dealers say, you don't have to report. This is outside the financial system. You don't have to
Oh,
report as a U.S. citizen. They
wow.
don't care. They just want to grow their business, and they're outside the U.S. jurisdiction. If you want to fight these guys, you have to hire an attorney in that jurisdiction. Good luck with that one. I mean, before making that decision, just understand what you're walking into. I've
Yeah.
seen these structured programs that turn out to be balance sheet financing operations. They're literally just using people's metal for their own interest, and then you don't really own a segregated product. You actually own
Right.
a security, which is a promise.
Yeah. So make sure your account's segregated. And Bob, I think that's a great tutorial for today. And you were one of the first when the squeeze was happening in the metals to start talking about lease rates and not being able to deliver it. So besides knowing the metals market, he's a pretty good market tactician. I remember he went to heavier gold, silver than gold when the gold silver ratio was well over 100. So he knows markets. Um, I think I provided a good option for my followers if they're looking for somebody.
Sure, and that's just me managing a hedge fund. It's that money
Yeah,
management side of me that says, okay, strip away all the hype and hoopla, and try to just understand the breadcrumbs that the market gives you, and try to understand what the structure is setting up and what to anticipate. These are things that I've done for 30 plus years. It's just, to me, it helps me understand and explain to a customer, hey, listen, this is why the price fell. This is why the price went up. It's not because,
okay.
everyone was
Explain
looking.
to me why did the price of silver and gold get hammered the last 72 hours?
Yeah, I mean, you're looking at, you had GVZ, the gold volatility
Oh,
ratios just plus 30. You
oh yeah,
had the silver volatility, implied volatility premiums on options. Yeah, plus, I
yeah,
think it was like plus 50. I mean,
yeah.
this is the,
Historic. It was
oh,
like it's being compared to the same run they had into the 1980 high. What it was up 9 weeks in a row going into going up to 880. And this recent run was up 9 weeks in a row. But in 80, it was the end of the bull market for 20 years. I think this is just taking a breather.
yeah, this is what if people ask, oh, was it the top in silver? And I would come back and I learned in the business, keep it simple. If you can write the idea on the back of a business card, that it's worth investing in. Not this esoteric 30-page research paper on why banks are going to fail and London's going to fail and all the other stuff. The gold silver ratio at 80 to 1, I've never seen silver top at a gold silver ratio at 80 to 1. It
Yeah,
typically goes down to 30 to 1 or 20 to
yeah,
1, that type of thing. So this is just normal volatility. The story hasn't changed. In fact, actually, if you look at the futures market like 1980 and 2011, those times, yes, the futures markets were pivotal. And you had the roll in April of 2011, the May roll that was occurring. In this instance, the open interest really didn't take off and the futures market wasn't participatory in this move. It was really the options market, and it was the foreign markets, the cash flow and capital flows coming
yeah.
into the ETFs and the options.
Shanghai,
Yeah, India. I
yeah.
mean, and
Cash and carry.
yeah, and the metal was just simply in the wrong place. A lot of it came to New York earlier this year, and it had to be shifted back to London because the spreads blew out. There was too much money coming in, and the ETFs are all located in London, so they were scrambling to find metal to create shares as capital flows were coming in. And of course, with the options market, a lot of dealers who are short calls had to buy the
Yeah.
underlying as a hedge. And then a lot of people that own calls exercise those calls, created more, and the need for creating more shares, which means they had to deliver more silver into the ETF to create their shares. That's the kind of stuff that I get into, not this, London's going to collapse thing.
Yeah. Yeah. You're a market guy, Bob. I think that's why we get along. So really great interview, and check out Bob on X on his handle at Profits Plus ID, which stands for Idaho. And one last question: did you get interested in metals before or after you were in the John Birch Society? Buddy, come on, tell me. After.
I was always somewhat of a gold bug, just growing up. I mean, the attitude, I guess, the generation I grew up in, which was, after, the baby boomer movement, that type of thing. Being that I'm 55, my grandmother got out of Poland a few weeks
Yeah,
before Germany invaded. I mean, you learn
yeah,
the need for real money, real assets, and what that really means. You can't get across the border with your Charles Schwab statement, type of thing. So to me, hard assets is, I think, essential when you're looking at very specific times in a political society or
yeah.
empire that's, I think, over leveraged, and you're trying to protect yourself because the government's not going to do it. You got to put yourself on a gold standard. And I think, to me, it makes a lot of sense. There's not always a time to own physical gold and silver. There's, sometimes to put that in more productive assets. But right now, we're living in a world of the need for creation of liquidity to maintain high
Yeah.
asset prices, to keep the wealth effect going, and then also fund the U.S. government. And history tells us that's not going to last forever.
Yeah, remember when Greenspan cared about the price of gold? He would watch it, and
Yeah,
he said that gold prices going up is not a good thing,
yeah,
and he
yeah,
kept it. And now we have a Fed chairman who eases with stocks at all-time highs and gold at 4,000.
yeah.
Boy, have things changed.
Definitely. And I think that one of the things that everyone's watching is, you're trying to say, okay, what's the next event to potentially move the markets? And we have going into, I think, October, November, you have this, the Trump tariffs now are going to the
Right.
Supreme Court. If they strike down those tariffs, that's a lot of billions of
Capital.
dollars that actually have to go back out of the U.S. coffer, which is going to create even more stress, and negative cash flow for the U.S. government. So that could catapult gold very easily if that comes to being. I mean, this is why we're living in a world from day to day. This isn't about, if trying to anticipate price action based on just simply supply and demand. I mean, there are so many things that the investor is being bombarded with on a daily basis.
Bob, I've met a lot of people. I've talked to a lot of people, but I was watching a video the other day. I'm not sure if you know who Martin Armstrong is,
Hmm.
but when Martin Armstrong is saying that you just have 2 months worth of food and water, I sit up and take notice. So his war cycles are peaking next year.
Yeah,
So
it's
there's
scary.
all kinds of things that could set off the next leg of gold, 7,000 gold
Yeah, I
or
know
something like
earlier.
that one day.
Yeah,
Yeah.
earlier in the summer, I think he was looking for a war in September. Thank God that didn't happen.
Yeah. Yeah. I mean, maybe he's early. But long term, I've seen him a lot of his calls be pretty good.
Yeah,
So anyway, it was fun hanging out with you.
definitely. I appreciate it.
All right, Bob Coleman, everybody. They'll be recording. It'll be out on X, and you could actually dial the number at Bob's place and talk to Bob yourself. So that's a wrap. Remember, don't just count your coins and your bars and your bags. Count your blessings and be a good steward. Do your due diligence, and I'll see everyone tomorrow in the room. Thank you, Bob.